Hey, you know how it's a good idea to check food ingredients before we buy and eat it? Well, if you don't, you're taking a considerable risk and you might pay the price later. Well, buying ETFs or exchange traded funds, which is just like buying a basket of stocks, is similar, but there's one really important thing that you need to know before buying one. What's up? I'm Russ, a welder who's passionate about passive income. I share my findings, investing evolution, and portfolio with you weekly on YouTube and in my free weekly newsletter, which you can find linked below. Big shout out to a new acquaintance, Mr. Nicholas Brado, a SeekingAlpha.com article writer who popped into a recent SCHD live stream that we had and sparked this video topic for you. You can find him over there at SeekingAlpha.com, which is linked below. If you want a special Seeking Alpha discount offer, I have an affiliate link for you below, which includes a free trial. Man, I tell you, we got more links around here than Pebble Beach. So buying an ETF is all about the methodology. We're buying the methodology for the ETF and not the individual stocks. That is the secret sauce. So we're going to stick with SCHD because that's been what we've been talking about. So go to Google and search for SCHD or whatever the ETF is. ETF prospectus is what you're going to put in. And then you'll find something like this right at the top for it, which will bring us to the Schwab US Dividend Equity ETF, which is SCHD, to the asset management page. And whatever page you're on, you're going to want to look for prospectus. So click that and it'll bring you to the prospectus where it's going to tell you everything that the ETF is about and what it aims to do. Now, I downloaded this and we have linked below, but it'll tell you right there the investment objective is to track as closely as possible before fees and expenses the total return of the Dow Jones US Dividend 100 Index. So what the heck is the Dow Jones US Dividend Index? Because we'll jump right back over to Google and Google the Dow Jones US 100 Dividend Index, and you can see below in the first result after the pricing is it's going to show you S&P Global Dow Jones US 100 Dividend Index. Now this is the homepage for it. This is a division of S&P Global, ticker SPGI, which is a dividend stock. You'll scroll down and click on methodology and then download that methodology. Now this is going to be all of the Dow Jones dividend indices methodologies, and as you can see, we're going to look for that one, the Dow Jones US 100 Dividend Index. Go ahead and click on that and it'll bring you to the whole kit and caboodle about what the Dow Jones US Dividend 100 Index is. And right off the hop, it's going to say the index universe is defined as the constituents of the Dow Jones US Broad Stock Market Index excluding REITs. Bingo, right off the bat, we know that if we buy SCHD, we are not going to be getting any exposure to REITs. The stocks that pass the first screen has to have 10 consecutive years of dividend payments, a minimum float market cap of $500 million, and a minimum of 3 months of average daily trading volume, $2 million. The stocks that pass all 3 screens are then ranked in descending order by the indicated annual dividend yield, and then the top half of those that made it are going to be eligible for the stock selection, but not quite done yet. So then we know that they're going to be ranked by the free cash flow to total debt, the return on equity, Warren Buffett would be happy, the indicated annual dividend yield, and the 5-year dividend growth rate, as they give the formula for down there. Then after that process, they're going to be equally weighted, and we see that the top 100 after all that process is complete are the ones that will be selected to go into the index. Then they have a few more rules down here, and they explain that the stocks are going to be weighted quarterly. No single stock can represent more than 4% of the index, and no sector can represent more than 25% of the index. And then lastly, there's a daily weight cap check. So that's a very quick look through of the Dow Jones US 100 Dividend Index that SCHD tracks. So let's hop back over to SCHD's prospectus, and it'll give you everything you possibly need to know about how much they're going to charge you. And then this one is interesting, the portfolio turnover. So we just went through, a lot of people like Broadcom. It was the top, one of the top holdings. It was booted out of the index because as the price went up, its dividend yield dropped and it was below the threshold to remain inside of SCHD. So it got removed. but during the most recent fiscal year, the portfolio turnover rate was 28%. That could be quite a lot. There's a prevailing wisdom out in Wall Street that the more you mess around, the more you fiddle with the dials, the more you handle, like a bar of soap, it gets worn down and it's worse for your portfolio. So that's something you need to be aware of. So they're pretty much telling you to pursue its goal. The fund generally invests in stocks that are included in the Dow Jones US Dividend 100 Index. Generally, it says. And they reiterate that it excludes real estate investment trusts, REITs, master limited partnerships, preferred stocks, and convertibles. They give a really brief summarization right here of what we just saw on the S&P Global Index page. And a couple more things here you have to know. They say it is the fund's policy that under normal circumstances, it will invest at least 90% of its net assets, including for this purpose, any borrowings for investment purposes in these stocks. So they're saying 90% of it, that leaves 10% wiggle room to invest in things that are above and beyond the S&P Global Index rules. There they reiterate, under normal circumstances, the fund may invest up to 10% of its net assets in securities not included in the index. So they can buy things that don't fit the criteria that S&P Global laid out, which they go on to explain in the rest of this. So just from going through those 4 pages, we see that SCHD is going to stay pretty dang close, but they can deviate a little bit from the index. And you would not have known that if you didn't read the prospectus. But if that's too complicated, many people just say, to hell with it, I'm going to buy VTI, because research shows that over time, a handful of stocks pretty much drive returns. So buying the total investable United States stock market takes the guesswork out of picking those individual winners. And again, just Google VTI ETF prospectus and you will go right to one of these top ones, just to Vanguard. Same thing. You're going to look for where you can find the prospectus. And here we can click Fund Literature, and right there, View Prospectus and Reports, where Vanguard will break out for you exactly what VTI is. But I'm going to give you the short of it. It's just buying the entire investable US stock market. And if you click on portfolio composition, we'll see that VTI has more holdings than the benchmark, so even they deviated a little bit, because I think they include some microcap stocks that the benchmark, which is the crisp US Total Market Index, does not hold. So when you buy VTI, you're buying 3,731 stocks currently and getting exposure to about 0.2% of foreign holdings that the benchmark does not have. And with it, the best of the best bubble up to the top: Microsoft, Apple, Nvidia, Amazon, Facebook, all the FANG stocks, Berkshire Hathaway. But the bad part about it that you gotta be aware is when you put, say, $100 into VTI, currently, as of this recording, $6.21 going into Microsoft, $5.39 going into Apple. So that is helping to further inflate these stock prices. But if money starts coming out, people get scared. This is why these individual names can drop a lot faster. So before you dive in and buy any ETF, you have to take at least a few minutes to read the prospectus and inform yourself on understanding the why and the how of their stock selection, or whatever they include in that ETF. So just like we wouldn't buy a mystery meal and hope for the best, don't invest in a mystery ETF. Dig a little and you will be a smarter investor. So we had a lively live stream discussion with the one and only SCHD Stan from X. And if you want to hear more about the SCHD rebalancing in this floating little box right here next to my head, click that. We'll tell you all about it there.